My name is Andrew Stotson. I want to welcome you to the Global Equity Valuation Competition. Oh man, has it been tough? The next competitor is Gunjan, who is going to be talking about presenting on Billionbrains Garage Ventures. Let's bring her in. All right. Well, we had a little technical difficulty, but I think we got it now. So I'm going to pull up your presentation, and I see it now. So I think I'm going to exit this, and then you can start. Are you ready?
Yeah, I'm ready.
Okay, I'm exiting now, so you can start now.
Okay. So, hi, I'm Gunjan Bothra, and the company I chose is Groww. And I am initiating a buy recommendation based on the target price of rupees 263 with a potential upside of 23% from the current market price of 214. I have derived the valuation from the DCF model, where for the first 3 years, the growth rate I assumed is 45%, which is the median EBIT. And for the next 2 years, the growth rate is assumed to be around 130%, mainly because of two reasons. The first is introduction of alternative investment funds, and the second is its expansion into catering the needs of HNIs, basically in the premium segment. And since India is a growing country, the terminal growth rate assumption is around 6%. So let's deep dive into in understanding what is Groww. So it was basically founded in 2016 and is India's largest digital investment platform. It offers multiple products and services, including stocks, IPOs, bonds, mutual funds, margin trading facility, etc. So it's a complete financial ecosystem. It is currently trading at a PE of 66.2x. Moving forward to industry and company analysis, let me paint you a picture of what's happening in India right now. If we will look 10 years back, the investment would have meant FDs or gold, maybe real estate. And fast forward to today, college students have already started investing in the stock market. So it is not just a trend, it's a shift as to how India think about money. And surprisingly, out of 1.47 billion population, just 16 to 18% have opened their demat account. And penetration rate is as low as 5% as compared to 62% in US. And fun fact is, even at such a tiny penetration rate, India is the world's fourth largest stock market. But the question is, who is going to capture this wave of new investors? And here's Grow's strategy is absolutely brilliant because it offers zero AMC, uh, easy interface, and multiple products at a single platform, creating a multi-product flywheel and an ecosystem lock-in for the passive investors. And if you talk about the result is over 40% of all new NSE active clients chooses Groww. But there is a small problem that if we look at the revenue mix, more than 50% of the revenue comes from equity derivatives. So diversification is needed. And the other problem is that even though Groww perfects the entry, but it bleeds at exit. And I am calling it as a leaky funnel because once these beginners goes to advance, especially in futures and options and derivatives, they now wants more experience and advanced products, and that's the point. They leave for the other products, other platforms like Zerodha or Dhan. But this problem is being identified by the Groww, and to cater this problem, it has acquired FISM. And FISM, the purpose of acquisition of FISM is basically to deliver services to the HNIs, and it has already launched its app, which is W for Wealth app, which offers services like portfolio management services, mutual funds, and alternative investments. Now, moving forward to the financial analysis, the first number that stood out to me was 44.7% PAT margin. A company which is still in a growth stage, this number is phenomenal. And if we see the revenue analysis, the revenue is continuously growing year by year. And in fact, in the last 4 years, the revenue grew more than 10x. And if we see what is backing this revenue growth, in this year, the total non current asset grew 74%. And if we see May two revenue growth drivers. The first is that obviously increase in volume, and the second is increase in new NSE active clients. And basically, the Groww is acquiring more and more customers. This because of to cater these customers the best services, it will need to invest heavily in its cloud infrastructure. And for that, Groww will utilize almost 15% of its IPO proceeds in this cloud infrastructure to boost it. And if we see the quarterly analysis, the quarter by quarter, the revenue is increasing. Over this year, in quarter four, it grew more than 142% year on year. This is about EBITDA. And the company started with a heavy investment and low profitability in 2022. And now it is a high growth phase from 2023 to 24. So it is continuously growing year by year, and we can see a massive revenue increase and margin increase in future as well. Now, coming towards what are the risks that are faced by the company, the most important risk is financial market disruptions. The other is policy and regulation changes.
All right.
And
Time's up.
oh, sure, thank you.
Excellent. Okay, let's go back to the first page. Okay, let me just look at a couple of things here. So what is your what do you think the growth, the top line growth that this company can make over the next 5 to, let's just say 5 years roughly? What do you think it would be?
I think I am not being too optimistic, but even if I see at the conservative approach, it will easily grow around 2 to 3x, because currently its main business is around broking, and it acquires more than 28% of market share. And if it is shifting towards the premium segments, that is to the HNIs, it currently holds less than 0.2% of its market share. So, considering the market size of wealth management, which is around $154.25 billion, it's a huge opportunity. And if we talk about its margin also, it's not like it is burning cash. It is operating at its highest margins as compared to its competitors. So I think it will easily grow to around 2 to 3x in next 4 to 5 years.
And the chart that you show here about PE and stock price,
Yeah.
35.68 is the mean for the company or for the industry?
It is for the industry.
Okay. And the company's trading at 66.2?
Yeah.
Okay. And what do you know what its price to book is?
Yeah, I know. It is around 3 to 4x.
Okay.
PB. Yeah.
And you think that DCF is the right way to value this company, or what do you think about the valuation method?
I think at its current stage, DCF is the best method probably, because if we look from the trading, like its competitors, uh, either its competitors are not listed, or they have always been catering to the HNIs, while Groww is a broking platform and is shifting to the HNIs. So I don't think there is a like a complete competitor for this in the listed market as of now. Even though Angel One is the closest competitors, but it is not planning to go target HNIs at the moment.
Okay, can you go to the next page?
Yeah.
I want to focus in on that revenue mix, because it's hard for companies to shift you're talking about a pretty big shift expectation. What makes you comfortable that they're truly going to make that shift away from equity derivatives?
So basically, if we see also about the broking segment, it has like if it was founded in 2016, and it's just been 10 years, and the growth has been massive. So if it has the potential to take the significant market share in the broking industry, I believe it has also the potential to target the HNIs. Earlier, it didn't had the potential because of a lack of manpower. That is the reason that it acquired Fisdom to gather professionals in the wealth management system. So it can easily, maybe not easily, but yeah, it can it can shift to the HNI segment. And talking about, as you have correctly mentioned, the revenue mix, even though it is difficult to correct it, but if we look at the gross core positioning, and more than 45% of the new users choose mutual fund. So it is more into the investment category, not into trading category. So it will, like, it's a necessity for it to fix its revenue mix as of now, because
Okay,
equity derivatives comes under FNO and all.
great. So how does it feel to complete this portion of the competition?
It was really exciting and fun. I saw the competitor. It's really a competitive competition for sure. But I got to learn a lot. And presenting in such a pressurable situation, it was a great experience.
Yeah, it's wonderful. And you did a good job. We had a little technical difficulty, but that doesn't stop us, right?
Yeah,
Excellent. Okay. Well done. And I'll see you in the Slack channel.
sure. Thank you.
Yep. Well, that was Gunjan, who has presented, and Groww, her business they're talking about is Groww. That completes the competition for the Global Equity Valuation Competition, sponsored by Valuation Masterclass and Koifin. Now the judges are working on their scorecards and deliberating, and then we're going to have the results tomorrow. The winner is going to win a cash prize of $500, and I believe the top 3 runners up are going to get access to a scholarship to the Valuation Masterclass Bootcamp, which would be amazing to see them in there. So what a great time. My name is Andrew Stotts, and I'll see you